The stock's almost 20% off its high, from just over a month ago. It was a difficult day. It's been a difficult few weeks.
How badly does this SEC investigation impact your outlook for Tesla?
The individual who owns almost 20% of the company is selling. The optics are not good. Nikola and their founder and former CEO, was charged with 3 counts of fraud. He's currently pending trial, which will happen next spring.
Garrett, let's talk about Lucid. This is an SEC under Gary Gensler that has not been hesitant to look into some SPAC mergers. Of course, all these SPACs have different stories.
In today's video, Tesla stocks flash crash and Lucid Motors are in deep shit. So let's get into the video. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment theme merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. First up, Tesla stock got absolutely smoked this morning. You see here the stock opened just over $1,000 and immediately crashed over 4% down to about $960. Absolutely insane. The low for the day was $950.50. That's almost 25% down from Tesla stock's all-time high, making a pretty strong recovery later in the day to finish down just 0.59%. But it just goes to show how volatile Tesla stock can be. Let me know in the comments below if anyone happened to pick up Tesla stock while it was on sale today. I did, although I shouldn't have. That money was set aside for my upcoming tax bill, but I had a limit order I kind of forgot about that was there just in case, and it turns out just in case happened. That order ended up executing, buying 50 shares at $969.69. And hopefully I won't be too late paying my taxes as a result. There's rarely a dull moment with Tesla or Tesla stock. And now onto the SEC investigation over Tesla solar related issues.
How badly does this SEC investigation impact your outlook for Tesla?
The reality is it doesn't really affect our opinion very much of the stock. The solar part of the business is only about 6% of Tesla's overall revenue. So I think most analysts view it as kind of a non-core business. It's really the automobile business is the primary driver of the top line and bottom line. And that's going to be the case for some time going forward.
Definitely a fair point. Tesla's solar business is a speck in the scheme of things, and this is going to be the case for many years to come. Although over the long term, Tesla solar will scale quite dramatically. But at this point in time, solar is this, auto is this. Doesn't really make much of a difference, does it?
Tesla, if they were to disclose every risk related to the company, their 10K filings would probably be 1,000 pages. So I think they're going to argue that, this risk was covered in some of the risks that they have already put out there in their filings. So, we don't really see it having a major impact, but it is, one of many risks. Of course, anything related to Tesla, whether it's a vehicle recall or a whistleblower complaint.
Shout out to the Tesla cyber whistle.
Really makes headlines. So I think that's what we're seeing.
Garrett has a great point here too. Even the tiniest morsel of news relating to Tesla, if it's supposedly negative, will create headlines everywhere and get a disproportionate amount of coverage in the mainstream media and the mainstream finance media just because it's Tesla.
Garrett, I think back to 2019, you'll remember that Walmart sued Tesla because of some defects with solar roofs they'd installed for them. Amazon also had similar complaints. So we know about some of the issues there. We also know that, it's been slower to market. But this is a stock that's been under pressure, right, since that November 4th peak. Was this just a knee-jerk reaction in the early part of Monday's session, or are there some big questions asked here around the long-term trajectory for Tesla?
Sure. So, the stock's almost 20% off its high. From just over a month ago.
Massive bargain in my opinion. Again, I remind you guys, I have my Tesla stock price targets available exclusively on Patreon. Check out the card in the corner or the link below. I think in 5-10 years time, today's prices, whether we're talking $950, $1,000, $1,200, are all going to look like absolute bargains.
It was a difficult day. It's been a difficult few weeks for the electric vehicle space. Of course, you had the Lucid news today. Rivian has sold off sharply in the last couple of weeks. So, I think you're seeing a group of stocks that had run up significantly A lot of investors were starting to ask questions about valuation, which is our primary hang up with Tesla right now. We have a hold on the stock, and it's primarily due to valuation, but also competition.
How a stock analyst can instantly lose my respect. Refer to Tesla's so-called competition as if it's a legitimate threat. I mean, this is super embarrassing stuff to hear from a stock analyst who should be smarter than that. It's almost as if somebody's picked up a Bronze Age religious text that claims the Earth is 6,000 years old and is now running around saying, hey, everyone, the Earth's 6,000 years old, aka the competition is coming. Look, it says so in this book. It says in this book, the Earth's 6,000 years old. Now, call me skeptical, but extraordinary claims require extraordinary evidence. There is zero evidence whatsoever that there is any compelling competition on the horizon for Tesla whatsoever. In fact, the complete opposite is true. There is a mountain of evidence to suggest that Tesla has an unassailable lead and nobody's ever going to be competitive in terms of price, performance, features, or functionality because Tesla's moving faster than everyone else. They've got the best engineers, the best technology, the best manufacturing techniques, the most profitable electric vehicles they're producing at the highest scale. I could keep going on and on and on and on and on. So I hate to break it to you, Garrett, but the competition isn't coming except embarrassingly fast and all over itself, and the Earth is about 4.5 billion years old.
And so I think you've seen some profit taking in Tesla and other names in this space over the last few weeks.
Garrett, how much do you think the sell-off has to do with Musk selling his own shares? And does that concern you?
Sure, that's another contributing factor. Obviously, Elon Musk has sold a lot of stock over the last month or so. So, it doesn't look, the optics aren't good. If you're considering buying stock and the number one shareholder and, the individual who owns almost 20% of the company is selling, it's not a good time. The optics are not good. So I think that's another contributing factor to the sell-off here in recent weeks.
Garrett, let's talk about Lucid. This is an SEC under Gary Gensler that has not been hesitant to look into some SPAC mergers. Of course, all these SPACs have different stories. You're not so worried, though, are you, about this disclosure?
We're not. And what we're seeing in the space is a lot more regulatory scrutiny. And it really goes back to another company that we follow, Nikola, and their founder and former CEO, was charged with 3 counts of fraud. He's currently pending trial, which will happen next spring.
Can't wait for that. Let me know in the comments below. Who else is pumped to see Trevor Meltdown Milton on trial?
There's some pretty serious federal charges against him. And so part of it is a lot of these companies have gone public through SPAC, which is a reverse merger, which entails less disclosure to investors, when a company goes that route. So I think the SEC is going back and looking at really looking at some of the disclosure that was made. It's not a concern with us for Lucid because we know they have a brand new factory in Arizona. They have a terrific product in terms of the Lucid Air, which the specs of that product, in our view, stack up to any electric vehicle available today. When you look at 1,100 plus horsepower and 520 miles of single charge range. Of course, it was just named the Motor Trend Car of the Year for 2022. So we view this pullback and the subpoena that they received from the SEC as really a buying opportunity. We're confident in their disclosures that they made in their documents leading up to their July SPAC transaction. And the assumptions and forecasts that they had in there for the next 5 years seemed very reasonable to us.
So I guess Garrett doesn't watch this YouTube channel. What a shock, because if he did, he may have seen me roasting Peter Rawlinson, Lucid CEO, over his extremely uncomfortable, squirmish answer to a very direct question about some of Lucid's supposedly reasonable targets and projections.
Are you on track for 20,000 vehicles in 2022?
We're very much on track for our plan. We're aiming for over 577 vehicles this year and a significant increase throughout next year as we grow the business.
Yeah, absolutely nothing whatsoever to worry about there. Peter Rawlinson didn't seem at all uncomfortable responding to that direct question about Lucid's production targets. It didn't seem at all like he was reading off a pre-prepared statement. It seemed like he was just speaking off the cuff and confidently reaffirming that they were on target to meet their goals. And it definitely didn't seem like, despite the fact that he was asked, are you on track for 20,000 vehicles, a specific number next year? It didn't seem at all like Peter Rawlinson, instead of answering the question directly, said that they were looking like increasing their production next year rather than answering, yes, 20,000 we're still on track. That didn't happen. Nothing to worry about here. Lucid aren't in any trouble whatsoever. The SEC aren't at all going to be concerned about these projections and the fact fact that it may have appeared that Lucid didn't actually believe they were on track to do the things they said they were on track to do. I'm probably just hallucinating. Let me know in the comments below what you guys think.
Are you on track for 20,000 vehicles in 2022?
We're very much on track for our plan. We're aiming for over 577 vehicles this year and a significant increase throughout next year as we grow the business.
So we think, we're telling investors, we're telling clients that it's a buying opportunity.
Back to Tesla, Garrett, how do you make your assessments of the company when the company itself doesn't communicate very much? Mostly, we're just reading Elon Musk's tweets.
The valuation is really hard to justify. So that's the biggest issue from our standpoint is we have to base our price targets on a 12-month time horizon. And so we think most investors are taking a 5 to 10 year view of the company.
So a couple of things to discuss here. First of all, Garrett is absolutely right, at least in the case of this Tesla stock investor, and I'm sure most people watching this channel, I have a 10+ year investment horizon. I privately model Tesla all the way out to 2042, 21 years into the future, and my publicly available Tesla stock price targets and Tesla valuation model go out 10 years all the way to 2031. And just another quick reminder, you can access my Tesla stock price targets exclusively on Patreon. Check out the card in the corner or the link below. This includes the bear case, the base case, and the bull case over the next 10 years, 22, 23, all the way out to 2031. And Patreon supporters at the investor tier and above can also exclusively access my full Tesla valuation model, which produces my Tesla stock price targets. So it's great to hear a Wall Street stock analyst talking about Tesla stock and going, you know what, we acknowledge that a lot of investors are actually modeling the company over a 5 to 10 year time horizon. He's right. One comment from Garrett that I really want to emphasize, however, I quote, "We have to base our price targets on a 12-month time horizon." Call me crazy, but this to me sounds like a gigantic excuse.
It's not our fault. We're not allowed to look further than 12 months into the future. If we're wrong about Tesla, it's because we're only allowed to, the rules say only 12 months.
I mean, if your methodology isn't producing optimal results, maybe change your methodology. After all, if we head over to Garrett's tipbreaks.com profile, we'll see he's not exactly slaying it when it comes to returns. Maybe this 1 year horizon isn't quite cutting it. If you look at his returns on Tesla specifically, we can see the average profit on the stock down 52.9%. Not so good. We can see sell ratings back in 2019. I mean, how high do you have to be thinking people should be selling the stock at this point in time? Seriously, by the way, Tesla stock has done about a 25x since Garrett was recommending people sell Tesla stock back in 2019, around $45 per share. Of course, Garrett now has a $750 price target on Tesla stock, and I'm sure that's going to age a lot better than the sell rating back at $45 per share in 2019. Right? That being said, I don't think we can genuinely blame a 12-month time horizon for these horrific returns and total misunderstanding of Tesla stock being completely off the mark with an average return of minus 50% on the stock. This is a great tweet from Gary Black with some Tesla catalysts over the next 12 months. For those of you that don't know, Gary Black has a 6 to 12 month price target on Tesla stock of $1,400 per share, practically double what Garrett's at. Now, why would this be? Same time horizon, huge variation in price target. Well, I'll just be honest, Gary knows what the fuck he's talking about. Garrett, unfortunately, at least when it comes to Tesla and most of his other stock recommendations based on the TipRanks profile, doesn't. Of course, there are plenty of colossally moronic stock analysts out there. In fact, let's look at one of my favorite analysts of all time. Gordon, the class clown Johnson. No, I'm just kidding, he's not an analyst, he's a shill. Wait, did I say that out loud? The profile I meant to bring up was Ryan Brinkman, who I personally believe should be on the brink of losing his job for being so fucking bad at it. Now, nothing personal, I've never met the guy, I'm sure he's a pleasure to hang out with in person, but when it comes to understanding stocks, and in particular Tesla and others in the same space, this guy is unquestionably a complete and utter fucking moron. But don't take my word for it, let's examine some of the evidence. So here we are over on Barron's. Let me quote the headline. Rivian ratings arrive. They are more positive than Tesla. Now, I just got to take a quick pause here. Does this not give you a lot of insight into how completely brain dead many stock analysts are on Wall Street? We'll explain why in just a moment. Of the 12 stock analysts currently covering Rivian stock, 8 of them rate the stock a buy, and 4 have a hold rating on the stock. 0 sell ratings. This gives Rivian a buy rating ratio of 67%. The average buy rating ratio for Tesla stock, 48%. Now, I don't have anything against Rivian, I hope they're successful, but we really need to take a moment here to think about how completely brain dead this is. All of these analysts are giving Rivian credit for things that they have no proof of actually being able to do yet. This isn't analyzing, this is hoping, this is dreaming. And again, I wish them well, they may be successful, but they have a few Mount Everest to climb, and these analysts are just assuming that climbing Mount Everest is a walk in the park, not a climb of a mountain. Now, this is where things get really interesting. JP Moron analyst Ryan Brinkman, one of the analysts who prefer Rivian. Let me quote, Brinkman rates Rivian shares a hold. His price target is $104 per share. That isn't a very bullish rating, but his price target values Rivian stock at roughly $100 billion. It gets worse. Make sure you're sitting down for this. If there was any question at all as to whether or not Ryan Brinkman was a complete and utter moron, these following words will answer that question unequivocally. Brinkman, however, rates Tesla shares a sell and has a $250 price target for that stock. Brinkman's Tesla price target implies Tesla stock is worth about $250 billion, okay? His price target for Rivian stock implies a $100 billion valuation. Tesla, $250 billion. I mean, honestly, I think Ryan Brinkman may possibly be the single dumbest analyst on Wall Street, and I really want to emphasize that. I'm not joking. Can somebody please explain the thinking here? How is Tesla worth only 2.5 times Rivian? Rivian, who've produced about 3 vehicles in their entire lifetime. Rivian have literally done nothing to date. I mean, I do wish them well, I hope they're successful, but they've literally done nothing to date. They've produced a handful of vehicles. They haven't reached scale. They don't have the engineering lead, the manufacturing lead, the technology. They've got nothing going for them yet other than a cool idea and potential. And yet this clown thinks they're worth almost half what Tesla is worth today. How does this guy have a job? Like, seriously, is it just me? Or is Ryan Brinkman legitimately the single dumbest stock analyst on Wall Street? Let me know in the comments below. This is a serious question. If anyone's got a better example of a brain-dead moron on Wall Street, please let me know. I don't think you'll be able to find one.
Tesla, of course, wants to grow their annual volumes by a factor of 40 over the next decade. So going from about 500,000 vehicles sold last year to about 20 million in the year 2030. And so that's why the stock trades at such lofty multiples is because investors are willing to pay these sorts of triple-digit multiples on a PE basis for that growth in the coming years.
He's absolutely right. Investors currently buying Tesla stock today, generally speaking, long-term investment horizon, they know that Tesla today is a tiny speck compared to what it will grow into in the future in terms of volumes or vehicles, revenue, etc., profitability, everything. So today it looks like a bargain with a long-term investment horizon.
But it's really hard. Tesla's really in a class of its own. You have traditional automakers who tend to trade at single-digit PE multiples, mid to high single digits. If you look at a Ford or a General Motors, and then you have a company like Tesla, trading at north of 100 times next year's earnings estimates.
Most folks watching will know comparing Tesla's multiple to a legacy automotive manufacturer makes literally no sense. They don't make the same technology. Oh, and by the way, you've basically got a dinosaur manufacturing company with a huge mountain to climb to attempt to transition to EVs, and ultimately most of them will fail and go bankrupt. So it's understandable they don't have the same kind of multiples as Tesla. But the second point here, talking about Tesla's multiple versus the Wall Street estimates for 2022, I've got news for you. The consensus estimates for Tesla's 2022 earnings from Wall Street are dramatically off the mark. They are massively underestimating Tesla's earnings. You can mark my fucking words. Quarter after quarter throughout next year, earnings estimates are going to increase for the full year. Wall Street are going to look like complete utter morons because they've dramatically underestimated what is obvious to some people already today. At this point in time, the Wall Street consensus for Tesla earnings in 2022 is probably 40 or 50% below where they'll actually come in. So I guess the point I'm making here is it's not really worth paying much attention to what Wall Street is estimating for Tesla and then using that to talk about the valuation, because Wall Street doesn't understand Tesla or the company. They've been dead fucking wrong on the company for literally the last 10 years, just in terms of the consensus opinion. Yes, occasionally one or two analysts will get it right, but the vast majority, the consensus on Wall Street, no idea what they're talking about. So why would we rely on their estimates about Tesla as a way of understanding the company and its valuation? Anyway, I hope you guys and girls have enjoyed the video. Let me know in the comments below if you managed to pick up Tesla stock while it was on sale today, and what are your thoughts about the SEC investigation into Lucid Motors? Is it a little bit of a nothing burger, or like me, do you think they might be in some serious trouble? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.